Hi, I'm Sean from Can Insurance. So insurance is a huge market. It's something that everybody needs. We do property insurance, which is a huge subset of that. It's $100 billion a year in the US alone. Now, insurance, for the most part, was actually entirely was optimized for the pre-internet environment. This is a world where consumers really prefer to interact locally with people that they know or maybe lives in the same town, where it's really hard if you're not local to understand the risks that you're insuring, where it takes billions of dollars to become an insurance company, and where the software is really old. Now, that's not the world that exists anymore. It's led to a bunch of fat dinosaurs that are at the bottom there. The world has changed. Consumers now actually prefer an online direct experience. That's true in every other area of financial services, and we also think true in insurance. If you look at customer satisfaction with the online direct experience that they get from their insurance carriers, it is really bad. It's worse than government. It no longer takes billions of dollars to start an insurance company, and the reason why is that the reinsurance markets have become sufficiently deep and aggressive that they're willing to put tech companies into the insurance business without having their own balance sheet. The third thing that's changed is there's massively more data available about the types of risks that we're insuring. For us, it's properties, it's addresses, and the people who live at that address or who own that address. We have tens of thousands of variables that we are able to gather about each risk before we even meet the customer. This is going to lead to a massive extinction event for the existing insurance companies. And the driver of that event are insurtech companies like ours. We've built ourselves to thrive in the new world. We have a vertically integrated platform that we built from scratch. It is elegant and simple. You can buy insurance for some of the riskiest homes and properties with 3 clicks on your phone. We're able to embed it in context where people are already thinking about property insurance, for example, a mortgage process, a mortgage application, or a real estate site like Zillow. We're able to do that with 2 API calls. It's backed by massively more data in easier to access infrastructure than our legacy competitors, and it's built with a much, much lower cost structure. Insurance is a wonderful societal good. It spreads out risk. It makes things possible. However, property insurance, in particular, is very inefficient. Only 50 cents of every dollar that you pay to buy property insurance is actually paid out in claims. The rest goes to stuff that you probably don't care about as a consumer. So we're the tiger, we're the mammal. We believe, that doesn't look good. So imagine the box is a little lower. We believe that the key to winning in financial tech and insurtech in particular is not those things to the left, but rather it's being really, really good at customer acquisition, and that's where we thrive. We're growing very fast. We're basically doubling every month. In September, we had a bad month because there was a hurricane. There were actually 2 really big hurricanes. But other than that, we're doubling every month, and our CAC continues to decrease. That's sort of step 1 of our plan, is get users and build an efficient infrastructure. Step 2 of the plan is, well, hey, we have all of this data. We have a very good understanding of the risks that we are insuring. Let's feed that back into 2 really excellent models, one that predicts customer response and one that actually predicts claims. So we're now only marketing to the customers that we believe will have a low loss ratio. And that allows us to innovate on the other 50% of the cost structure and decrease that. We have also built a best-in-class claim solution. So we had the benefit of there being a hurricane recently in Florida, which was our first state. The claim solution that we built is mainly driven by text messaging, drones, and aerial imagery. And it's much more convenient. We have a very high satisfaction rate, and also about 1/3 of the cost of what a traditional carrier would do. We also bundle our policy with a significant number of risk mitigation devices that reduce the amount of claims that we have. Make your home safer. And we have a really deep team. My co-founders and I have been doing a bunch of online financial services stuff. I had a payments business I sold to Groupon. Sebastian sold his lending business to Avant. We have a really deep bench. That's pretty much all I have.
So Mark, we'll start with you for questions. think maybe your last slide is asking that. You're not an actual carrier.
We're an MGA, so for the customer,
gotcha.
we're the carrier.
So you're working with a reinsurer, it looks like, to take the risk in that
We are,
case.
for now, one reinsurer. I think down the road, different reinsurers for different risk types to
And then
match it up properly.
how are you handling fraud on your claim side, which is pictures and texts, seems ripe.
Oh yeah, for sure. So we do physical inspections. The key is that we do them for many fewer. So what we found is like in the Hurricane Irma, for example, a traditional insurance company was sending somebody out to look at a bunch of claims that were actually pretty small. The cost of adjusting those claims was like $3,000 on average across the industry. All right, well, we're much better at triaging it. So we send out somebody to maybe 15, 20% of the number of houses where that a traditional carrier would do.
All right. Any questions for me? Okay, Hayden?
Lots of questions.
All right.
Let's do some quick hits. How many states are you in?
2, Florida and Texas.
Oh, the hard ones.
That's where we started.
And can you share like your base and how many customers you had or what kind of traction you've got now?
Yeah, for sure. We launched in April, so growing fast on a small base. Last month we did like 600K in premium.
Excellent. And so it's homeowners specifically, not homeowners and renters. It's just...
We don't do renters, we do property insurance. So it's homeowners, we'll do rental properties, but for the owner of the building. We don't do any commercial yet, but we will.
Got it. Okay. So overall, the value prop I'm bought into. I think marketing expenses, I mean, it's...
Yeah, you're the insurance guy, of course you are.
Yeah. The numbers are stark. What I'm concerned about is your target market is not necessarily as clearly defined. Because if you're going after the homeowners market writ large, you're battling giants. Your cost of acquisition is certainly lower, but their advertising costs are higher. So how do you intend to compete up market and or focus your marketing strategy to acquire customers long term?
For sure. I think we have some major advantages over them. And the first is they're very inefficient in their spend. So where they, yes, they have a huge budget, but they're basically hiring quarterbacks and pitching me insurance while I'm watching football. I'm not thinking about insurance when I'm watching football. What we do is we actually pre-underwrite every address, and we hit them with targeted campaigns, online and offline. We use direct mail, we use Facebook, we buy a lot of traffic online. But the key is I'm only marketing to the folks that I actually want on the books, and it allows me to spend a lot less money and get a much higher conversion rate. The second thing is we have such a clean online process that we usually win when we're buying traffic because our conversion rate is higher. And it also helps that we don't have agents, which I think you probably get. The third thing that we have is we talked about the embeddability, right? I have an insurance that I can embed with 2 API calls. So that allows me to reach people in context where they are thinking about it. I can embed with mortgage people, real estate sites. I can embed even we have a product that we sell to local real estate agents. It's like an insurance text message. Well, that's really popular. It's not something that big carriers can do. They just don't have the tech for it.
Great. Excellent.